Okay, you guys asked for this one. This is an LLC versus an S corporation and how it applies to your business. An LLC and an S corporation, you get the limited liability protection, which will protect your personal assets, house, cars, and everything else in your own name. Forms to file. With an LLC, you do a 1040 and a Schedule C. With an S corp, it is an 1120S and a K1 depending on your structure. What are you going to be called? In an LLC, you're a member, and in the S corp, you're a shareholder. Now, in an S corp, you have to have a minimum. You cannot have any more than 100 members, or you have to go to a C corp. Profits, it's a pass-through or owner's distributions in an LLC. And in an S corp, this only applies if you have partners. LLCs only have one class of stock. So if you want to give your employees stock, you're going to have to be an S corp. As for taxation, you are going to be paying self-employment tax, both sides, as an LLC. When you are an S corp, you avoid double taxation. Translate in savings for you on $100,000. LLC plus S Corp equals $8,010. Let's see how. One of the number one biggest advantage of filing as an S Corp is the self-employment tax savings. So let's break down how this works. Let's say you currently make $100,000 being self-employed right now. You're paying 14.13% in self-employment tax. One of the greatest benefits about filing as an S Corp is you can pay yourself a reasonable salary. So let's say in this scenario, you pay yourself a salary of $40,000. That $40,000 is now taxed like an employee, where you pay 15.3% of Social Security and Medicare taxes, which results in $6,120 in taxes as opposed to the $14,000 in taxes you'd be paying if you pass through all of that profit to your bottom line. That right there is a savings of $8,010. There are other benefits of filing as an S Corp, like retirement planning and healthcare tax savings, which we'll cover in another video. Follow for part 2.
Okay, so here's a brand new method to make over $1,000 a day. It's an already existing method, but I'm gonna add a little bit onto it. I'll show you exactly how to do that right now. So head on over to clickasnap.com. This is how the front page looks. So with Clickasnap, how it works is you get money for original photos and they pay you for each view. So right here, you see it's 25 cents per photo view, $15 minimum payout. So that's what you'd need to reach. So for example, under nature, this guy made over $10,000 from just taking this photo. But if there's one thing I know about the people on this page is that you're all ballers and you don't want to wait around for a bunch of people to appreciate your art to make money. I'll show you exactly how to work your way around that. So let me formally introduce my friend the Refreshinator, which will auto-refresh your page a ton of times so you can accumulate the money much quicker. And for a free option, browser auto-refresh.
I'm going to show you a really easy way to organize all of the finances for your business and all the information that you're going to need for your taxes at the end of the year. QuickBooks Self-Employed allows you to track all of your income and expenses, also your business miles and your invoices. I love it because it integrates with Etsy, so all of my Etsy transactions are imported and classified automatically. You can also set up a business credit card or checking account to import automatically as well. Anything that's not imported automatically, you can enter in the transaction screen. It also allows you to upload a receipt, which is really great to allow you to have proof of your expenses. If you pay quarterly estimated taxes, it'll give you a projection of those payments based on the information that has already been entered. Another big plus for me is that it has a profit and loss statement, and this will show your profitability during a certain time period, taking into account all of your expenses. And the tax summary report is a summary of what will go on your Schedule C. So all you need to do is give this to your tax preparer or import it into TurboTax. Link to the exact program that I use in my bio, so check it out.
Hi, I'm Coach Jarvie, one of the online trainers of our company, and I'm looking for 10 people who's willing to learn how to earn online. If you want to know the people that I've already helped, you can check my next video.
Got school loans? This one's for you. In December of 2020, the IRS put out a 2,000-page document. Inside of that document was a ton of information for not only the 2020 tax year, but also for 2021 and 2022. But if you have school loans and you own a business, you're going to want to listen up. Businesses were allowed to spend $5,250 on employees' professional development. However, in the document that just was released in December of 2020, They said that you can also use it on student loans. So if you paid a total of $5,250 in student loan payments in the 2020 tax year, you can reduce that off of your business return. And as always, consult with your tax pro, because one, you want to make sure they read the document, and two, you want to make sure that your business structure will support this type of deduction, because in business, what you don't know will cost you a lot of money.
Yeah, about to see it shine, 'cause we're golden. They can never break us down, 'cause we're golden. They about to see us glow, 'cause we're golden.
Here's our financial example written out. If you haven't seen the first 4 videos, make sure you go back to my bio and watch them. Our formula is revenue minus expenses equals profit. In our example, our revenue was $100 minus our $20 in expenses, and that leaves us with $80 in profit. Here's our breakdown. $80 profit, 40% is $32, and that's what we use for our payroll. 25% is set aside for taxes. That would be $20. 20% is set aside for debt or our innovation fund. This example, it would be $16. And finally, 15% or $12 is set aside for our savings. Your tax numbers, you will want to talk to a tax professional or a CPA to find out what percentage you should be saving towards your taxes. I live in Oregon, and based off of the federal and state regulations, this is the amount that I save.
Hi, I'm Sarah. I'm 22 years old, and I'm going to start saving $333 a month. That's $4,000 a year towards my future, but I'm only going to save for 8 years until I'm 29 years old. Hey, I'm George. I'm 22 also, but I think I'm too young to start saving, so I'm just going to wait until I'm 30. I'm going to save that same amount, $4,000 a year, but I'm going to do it all the way until I'm 65 years old in retirement. Now I'm 67. Remember, I saved $32,000 in my 20s for 8 years, and I didn't save again, but that's now grown to over $1.4 million for my future. Wait, what? I saved for 30 more years than her, and I saved $151,000, but I'm only at $1.3 million? That's right, Sarah has over $110,000 more than George, even though he saved 5 times as much, only because she started saving earlier.